investors continuing to borrow cheap dollars today after the IMF said over the weekend that the greenback is overvalued, and could continue putting pressure on the euro. So is now the time for intervention on behalf of the dollar, and just how much lower can the buck go? Joining us now is Andrew Busch, global FX strategist at BMO Capital Markets, and he's also a CNBC contributor. We also have with us Boris Schlossberg, director of currency research at GFT Forex, and back with us, of course, is Jim Pethokoukis. Thanks for all of you for joining us. Andy, how low can it go?
Well, that's a good question. You know, we at BMO Capital Markets have been looking for this dollar to continue to decline through the year end. I think we can get as high as 160 in the euro, down to 72 in the U.S. dollar index. And basically, you know, the IMF's report plus the G20 doing nothing or really reaffirming that they're going to stay on the stimulus path is telling you the direction. It's basically a weak dollar, or what I like to call the Larry Summers doctrine, which is the U.S. needs to export more, so that translates into a weaker dollar.
Boris, I mean, should we be worried about this?
Well, the Fed's not worried, so we're not worried for the time being. I think, you know, the worry comes...
That's cold comfort, I think. That's not making me feel a whole lot better as we seem to get closer to being Mexico here.
Well, we're far away from that just yet. But I think, you know, the real worry is when this gradual dollar decline, which is what the Fed exactly wants, and Andy is absolutely right. We're probably around 155 euro dollar at this point. Could turns itself into a currency crisis. And I think the key event that will probably trigger that is if you see the dollar dipping at the same time as equities dip. If you start to see an investor revolt against the dollar, then that becomes a much more worrisome effect. For right now, the dollar seems to be, you know, depreciating slowly, but equities are rising, and that's giving people the illusion of wealth.
Yeah.
And so far, so good. That's pretty much how it's trading.
Jim, that's an interesting point of view. I mean, is that the sign of the apocalypse when we finally see stocks declining right along with the dollar, or is it something else?
Yeah, well, actually, I mean, I think that's a fantastic point because, as we've been saying up to this point, we've seen this dollar weakness driving stocks. And you know, investors are going to keep playing that game. They're going to keep running that play until it stops working. And at some point, it is going to stop working. I think that's a tremendous danger sign. Though I would like to say about the Fed, I think the story of the Federal Reserve over the past decade, it needs to worry a little bit more than what it has. I mean, that's part of the big story of the financial crisis. A Fed that is not worried enough about inflation, has not worried enough about currency, has not worried enough about all kinds of measures. I'd like to see my Fed be a little bit more of a worrywart.
Yeah. Andy, what about that? I mean, is there not enough concern out there besides Larry Kudlow, who I have to speak for today? Besides him, is there not enough concern out there about hyperinflation, about a weak dollar and it, you know, eroding confidence in the rest of our economy or our debt?
Well, there is concern out there, and guess who has the concern? Our largest U.S. dollar holder, China, which over the weekend warned the U.S. again about the fiscal deficit here in the United States. And it's no coincidence that after the U.S. House passed the $1.1 trillion adding deficit health care bill, that the dollar sold off as well. So this is a concern clearly outside of the country that whatever is going on in Congress when they're trying to pass health care legislation that greatly expands the deficit, that the dollar gets whacked as well. So that's a big concern. One other thing, I kind of disagree with Boris on equities. I think the first place this is going to show up is in the Treasury market. And this week, this auction is the first time the Fed's not going to intervene to buy Treasury securities to calm things down. So we're going to get a better read on how Treasuries react without the impetus of the Fed.
Boris, what do you think about that? Are you going to be watching that sale?
Yeah, I will be watching that, and Andy makes a good point. I think the short-term to Treasury market is going to be critical. I actually disagree with the whole worry word about the fiscal issues. I mean, yes, you know, the healthcare bill clearly is going to be a fiscal drag, but the real problem with the Fed is they're handicapped by the employment situation. It's impossible for them to raise rates until the employment situation sort of stabilizes. That's why jobless claims are such a critical component to what we're watching. If those things dip below 500,000, there's perhaps ray at the end of the tunnel to the dollar.
Listen, if we're saying we're not going to see any action from the Fed until we see a better employment situation, we may not see any action from the Fed. Forget about 2010. We may be talking more like 2012. I think that is just terrible for the dollar.
Yeah, but there are other ways to defend the dollar, right? I mean, they don't just have to raise interest rates. They could
the best way.
Talk tough. They could, you know, cut the deficit or talk about at least, you know, being fiscally responsible down the road. I mean, is there something else they could do?
They don't want it to happen. They want a weak dollar. They want a weak dollar because, as Larry Summers very clearly pointed out at the beginning of this administration, he wants the U.S. to export more and consume less. Right. And when I met with Treasury officials a couple of weeks ago, I asked them that very question. Do you agree with Larry Summers on this? And they said, absolutely. That's a weak dollar policy. It's hard to export when your dollar's strong.
This global rebalancing thesis is as close as this administration has to like an overriding economic philosophy and ideology. This is U.S. policy.
So at what point is it dangerous? At what point does this administration look around and say, okay, the dollar's weak enough? What do you think? Boris, what do you think? When's enough enough?
That's exactly the point. It's perfectly fine so long as the decline is gradual and subtle. But once it becomes a runaway market...
Is it subtle? I don't know how subtle it is right now. It's at a 15-month low.
It is. The pace of the decline is relatively subtle. If we start to see 2, 3, 4% down days, that's when everybody's going to really start to freak out. Remember, currency markets are speculative markets in nature. They will push the dollar as far as they can and as far as they want to. There's almost, not enough. They'll never go to a moderate point. They always go to extremes.
Andy, yeah, go ahead. Finish, sorry.
No, I was going to say, and that's why they will try to push the Fed into a corner, I really do believe.
What about crude oil bouncing up as a result of the weak dollar? I mean, that's something that bites consumers. That is definitely on the radar. Andy, what do you think about that? Could that be the thing that maybe changes the administration's mind down the road about the weak dollar?
It may. I mean, you're going to have to get oil up above 100 to get people's attention and gasoline prices to go with it. Right. I mean, we're still $20 away, so we're still, 25% away from that. So it's going to take a little while before they sit up and take notice. But I think the IMF report, circling this right back to where we started, in what they said was basically, a free-floating currency acts as a stabilizer for an economy. It allows the weaker economy to have the currency, devalue essentially, and allow their exporters to gain a competitive advantage against other countries. That is happening. What everybody else in the rest of the world is noticing is obviously China's not following that. So even the Brazilians are pointing this out, saying that the link between the Chinese yuan and the dollar is a problem for developing countries.
Yeah, and is screwing up their whole equation here. All right, that makes sense. Thanks for joining us, guys. Interesting